So currently, the bull market is in its 7th month. Wow, time really flies. Ever since the bear market ended last year in October 2022. So ever since then, the S&P 500 is up over 19% from the lows and up 8% year to date. So I got a question for you. Are you enjoying this bull market? Well, if you are, type yes into the comment section. Well, if you have been following my lessons about only holding fundamentally great companies and adding more shares when they were very undervalued in the last couple of months, you should be seeing very nice gains in your portfolio over the last 7 months. And you should have recovered the majority of the drawdowns that your portfolio may have experienced during the bear market of 2022. And that's why it's really important to stick to your investment plan. Don't panic during bear markets. Hold great companies and keep adding shares when they're undervalued, and very quickly you can see your portfolio rebound and go to new highs. And as most of you know, my portfolios went through a drawdown as well last year. Yep, it was not immune to drawdowns, but again, by sticking to my investment plan and holding only the top 1% of companies in the world and adding shares when they were undervalued last year, I managed to recover the majority of the drawdowns. So for example, in my first account over here, you can see, let me just log into my account management. So you can see year to date, it's up 21%, way above the S&P 500, which is up 8%, way outperforming the S&P 500. Over a 1-year period, 12 months ago, you can see it's up 21.62%. In my other portfolio, which is this particular portfolio, it's pretty much the same. If I log into my account, you can see that it's year to date up 23.74%, and from 1 year ago, it's up 18%. Now, I believe that most of you who have been following my investment principles and in my community should also be seeing double-digit returns in your portfolio as well. And if you have, do leave your comments in the comment section. We'd love to read about how you guys are doing as well. But it may surprise you to know that the majority of people out there, both retail investors and institutional investors, really hate this bull market. In fact, it's been said that now this bull market is the most hated bull market in history. Just do a Google search or Bard search and you can see many of these headlines, right? On Seeking Alpha, the most hated rally I've ever seen. This was in February 2023. And more recently on 18 April, on The Street, which is a news site, financial news site, stocks the most hated rally yet. So seems a lot of people hate this rally. You can tell, especially on Twitter, because I'm on Twitter pretty often, and I would say that easily, 8 out of 10 tweets are very, very hateful of the market rallies. Like, what the hell's going on? How can a market go up? It's being manipulated. The market's rigged. This is total rubbish, right? And every time I read that, I always laugh because, I've been in the markets now for over 31 years, and I've been through countless bear markets, countless crashes, and countless new bull markets. And every time is the end of a bear market and it's the start of a bull market, you always get the same people hating it, saying that, oh, it's rigged, it's manipulated, and they don't believe it, they're in denial. And by the time they believe it, the market is really at new all-time highs and it's too late to buy in. It happens every bear to bull market cycle. Always. For the last 31 years, I've seen it for myself. So again, why are a lot of people hating this rally this year? Again, very simple, because number one, a lot of retail investors, they sold in panic last year and they never got a chance to buy back in. And they were hoping it's going to go lower, but it didn't. It kept going up and it's like, fuck, I can't buy it back now, it's too high, come on, come down. And you're hoping it's going to come down, but it never comes, it keeps going up. But that happens all the time. You can see, for example, from these brokerage reports, this is a report from the clients of TD Ameritrade, which is a broker, but same thing with all brokers. You can see that this green line shows you the net buying or the net selling of retail investors. And you can see that retail investors, they were net sellers in March 2020. That was the low of the COVID crash. And once they dump their shares, the market goes up, right? Same thing happened last year. Retail investors sold in panic in December 2022. 2 months after the bear market ended, they sold in panic and then the market has rallied up 19% from there, and they are left out of the market, and of course they're feeling very, very hateful. Even worse, some smart aleck retail traders, they shorted the market, and they've been shorting the market for the last 7 months and getting their face ripped off. That's why I keep telling you guys that the main purpose of the stock market is to make fools of as many people as possible. When everyone thinks the market's gonna crash, it keeps going up. Market goes opposite of what everyone thinks. So never listen to the predictions of people, never listen to all these economic data and news. It's all for entertainment purposes. Just stick to holding great companies, because great companies always will go up. And focus on the trend of the market, which I keep saying, focus on the trend of the market, right? Take a look at these charts. These are from Fundstrat research, and you can see, for example, the AAII, which is the American Association of Investors, something like that. The survey shows that the majority of people are still very, very bearish. Sentiment is extremely bearish now, even compared to 1 year ago. So as the market keeps going up, people get more and more and more bearish, because they keep thinking it has to come down, right? And the more they are bearish, the more they don't dare to buy, the more they short the market, the more they miss out, the more they get killed. Look at the retail cash on the sidelines. This tells you how much cash there is on the sidelines that people dare not invest. They're holding cash, hoping to get in, but they can't because the market keeps going up. You can see that as of end of March, there's $1.9 trillion of retail cash on the sidelines. So eventually they will come back into the markets, right? By the time they come back in, the market would have gone up a lot more. And by coming back in, they feel the last hoorah of the market. And that's when the market will come back down again, right? It always happens like that. So why is it the last 7 months so many of the retail investors were so negative, so bearish, and they didn't dare to buy? Because like I said in my previous video, they fell for the doom and gloom scam. On Wall Street, these financial gurus and media, they perpetuate the doom and gloom scam, always telling you that, this time it's over, it's never coming back, we're gonna die, and people fall for this crap, every time bear market reverses into the bull market. Again, I've seen this now for 31 years, through 08, through 2012, through 2020, and now 2023, right? Look at all the bad news that they told you last year in the media, right? 9 out of 10 was bad news. A global recession is inevitable in 2023. This was back in 18 November last year, right? The stock market will fall 25% when the looming US recession hits, says Deutsche Bank. This guy says it's a dangerous game we are playing, right? Bloomberg, global stocks face more hurdles in 2023. Bloomberg, IMF chief warns of tough year for world economy. Last year, 21st December, S&P facing historical warning sign after this year's slump. And early this year, people got even more bearish. This guy from JP Morgan said that, I'm outright negative on stocks. And he said it on 24th of January. And of course, we have got Michael Burry, who he himself said, sell. And later he said, nope, I'm sorry, I was wrong. And now you find out he was buying, the bastard, right, from the 13F filing, all right? And then people like Jeremy Grantham says, brace for the S&P to plunge 50%, painful recession to strike. He said that 21st March. Bank of America says the stock market lows will be tested again. Morgan Stanley, Mike Wilson says, sell any bounce on the government intervention. The next leg of the bear market has begun. Really? I haven't seen that, right? Stock markets are set to crash 37% as the suckers rally ends, and again, all this negative shit, right? Now, what really pisses me off is, at the end of the day, who gets hurt? It's the retail investors who listen to all these doom and gloom prophets who get hurt. Not these people, they don't get hurt. In fact, they are doing really well because they are buying stocks. Like, for example, again, Jeremy Grantham warns that the S&P is going to plunge 50% this year, but he's buying stocks. You can see from the last 13F filing, or you can check out Guru Focus, which is his website, or Dataroma. You can see that his fund bought 86 new stocks, right? Well, yeah, he did reduce some of those stocks, but in aggregate, he actually added even more shares. So if he thinks that the market's going to crash 50%, why the hell is he buying stocks? And why is he holding, billions of dollars worth of stock? Now, same thing with this other guru, Stanley Drunken who is George Soros's good friend. September of last year, he says that the US is going to fall into recession last year. He was extremely bearish, but again, the last 13F filing, you can see that again, he bought 19 new stocks and he bought and added a lot more of shares to many of these companies. So lesson, do not listen to what they say, watch what they do. It's often very different. I'm probably the only idiot that tells people I'm bullish when I'm actually buying stocks. Maybe I should start telling people I'm bearish, right? Well, who knows? Now, again, it's not just the retail investors, but a lot of institutional hedge funds also hate this market rally. And the reason is because, for example, you can see that S&P net non-commercial futures positioning shows net short of the S&P futures. And what this means is that the majority of hedge funds have actually been betting that the market's going to crash, and they are shorting the S&P futures, which means they're going to make money if the market goes down. But as the market keeps going up, they make huge losses. And these are, again, institutional hedge funds as well. Here's another example. Leverage hedge funds continue to fight the tape. What does that mean? That means to say that the tape represents the trend. As the market keeps trending up, they keep shorting the market. As they short the market and go against the trend, they keep losing more and more money. Why do they do that? I've got no freaking clue, right? So smart money is not always smart money. Sometimes smart money can be just as dumb as the dumb money. You can see massive short positions just before this recent rally in the markets. So is it normal for a new bull market to be hated so much? The answer is yes. I've got news for you. Every new bull market in history was always hated. And at that time, it was always known as the most hated rally in history. It's always the most hated, right? So let me give you an example of all the past new bull markets that started after bear markets. And you will see the same headlines. Check out October 8, 2009. This was the start of the bull market after the financial crisis bear market. And again, what was the headline on October 8, 2009? The most hated rally on Wall Street. So let's go back in time and let's learn from history. So this was the 2008 financial crisis. And again, this was the bear market, and the bear market ended in March of 2009. Now, I called the bear market bottom in January 2009. So I was 2 months early at that time. In fact, those of you who have been around would remember that I launched my book at that time. This was my book. You can still buy it from Amazon. And my book was published on the 1st of January 2009 called Profit from the Panic. So in that book, I rushed that book out. It was the fastest book I ever wrote. In that book, I said that the market had bottomed. And again, I was 2 months early, right? I was there, and then it still went down a bit. I was like, fuck, okay, but then, whoa, it started going up. And I made my first million in the markets during that time, right? So again, can you see, like what I've taught you before, when the 50 moving average crosses above the 150 moving average and it starts sloping up, that is a confirmation of the bull market. So you can see the bull market was confirmed right here, right? And in September, again, was it September? Let me just check again. Yeah, sorry, October 8th. Which was somewhere here, right? What did they say? It's the most hated market rally because the market was rallying already for, again, about 9 months. And again, it's always 9 to 10 months of bull market from the bottom. People hate it because they all missed that bottom, or they shorted it, they've been shorting it, and they get their face ripped off. But again, that was the start of the bull market. And how long did that bull market last? Right? That bull market lasted pretty long, right? There was a bit of a correction over there. This was not a bear market, but it kept going up. A bit of choppiness over here. All right, and the market continued to run all the way up, right? Now, here, this was not officially a bear market because this dropped 20%, but it didn't close 20% down. It kind of like rebounded very strongly. By the way, this was actually caused by the US government getting their debt downgraded by S&P. And this was in a way caused by the debt ceiling at that time, which is coming soon. So we could have that. You never know, right? But anyway, that's what caused that 20% drop at the time. And again, what happened after that drop? A lot of people here sold in panic. And a lot of institutions shorted the market here. And once they shorted it, it went up. They was like, oh shit, right? And then when the bull market again continued over here, they hated it. Again, check this out. Here. This one, right? 7 August 2012. Again, the most hated stock market rally in history. So again, August 2012 was right here, right? So after, again, this crash, people sold in panic and they were waiting for it to go lower. They shorted the market. Market went up. It was a confirmed bull market. They said they hated it and it kept running, right? And when was the last one? Let's look at the last one. The last one was, there we are. Oops. The last one was in 2020, not too long ago, right? So as you guys know, I called the bottom perfectly for that one. So sometimes I get it right at the bottom. Sometimes I'm 2 months early. Sometimes I'm 3 months early, But it doesn't matter. As long as, you stay in the markets and you buy near the bottom, you make a lot of money. That's the point. You can't be right exactly all the time. I'm not right exactly all the time, all right? So check this out. That was the crash, the COVID crash. That was the bottom. A lot of people sold in panic. A lot of people shorted the market there. And when it went up, they was like, in disbelief. How could this happen? And they got screwed, right? And again, they hated it again. Check this out. There we are. 2nd June 2020, the most hated rally in history just won't stop. All right. When was the 2nd of June? There, 2nd of June. Again, once it goes up, they hate it and it keeps going up. The more you hate the bull market, the more the bull market will continue. Always remember these immortal words. Bull markets are born on pessimism. They grow on skepticism. The more people are skeptical, the more the bull market grows. But the bull market matures on optimism, which means when the majority of people start to get optimistic, hey, it's real, it's a real bull market. Oh shit, then it's beginning to mature. And bull markets die on euphoria, which means when everyone gets really excited and they start to leverage and borrow again, that's when it ends. Which we are nowhere near because currently margin debt is at an all-time low, which means the market is currently very deleveraged. A lot of people have deleverage their accounts, all right? And again, we all know this very famous psychology of a market cycle, that the beginning of a bull market rally is always one of disbelief, that the majority would always say it's a sucker's rally. And again, if you go onto Twitter, you find that again, 8 out of 10 people say that it's a sucker's rally, it's a bear market rally, it's not going to last. And as long as they disbelieve, this gives fuel for the bull market to continue, right? And again, when people get optimistic, when they start to believe again, I believe, right? Once they get euphoric, that's when you want to be careful. All right, so where do we go from here? Now, again, taking a look at the price action, I always say that, no one can predict the future with absolute certainty. All we can look at is what's the trend of the market. The trend is your friend. It gives you an idea about probabilities, right? So currently, the S&P 500 continues to be on an uptrend. The 50 moving average is above the 150 moving average. They're both sloping upwards. The 200-day moving average is sloping upwards. As long as that is true, then the market remains on the uptrend. But again, we are now coming into an area of resistance that has been tested a couple of times, which is over here, right? So this is a significant level of resistance. This was a previous level of support over here, and it got tested back in January, got rejected off that, and then it went up again in early May and got rejected as well. So it keeps testing this level of resistance. Now remember that the more that level of resistance gets tested, in a way, sometimes the weaker it gets, right? Because every time it goes up, people sell, it comes back down again. It goes up, people sell, it comes back down again, until you run out of sellers. So once there are no more sellers, then the buyers would then begin to be able to break that level of resistance. So we'll see. Now, eventually, this resistance will be broken. And once it is broken and the market closes above 4,200 points, and that would confirm officially the bull market. Like I keep saying, it's not officially a bull market yet. It's just my call that it's a bull market based on the price action, right? So now I mentioned in my last video that I do expect the next few months to be choppy because again, it tends to be, June tends to be a very bearish month. So will September, okay? But it may get choppy, right? Especially June. As you guys know, we've got the debt ceiling impasse happening. Although there was news yesterday that Biden and Kevin McCarthy, they're kind of like agreeing that they will raise the debt limit, but you never know, okay? So in the event that they don't raise the debt ceiling or the US debt gets downgraded by another credit rating agency, could we have another pullback? Could we have another sell-off? It is definitely possible. That could be a catalyst, of course. Now, I saw an interesting post by Mark Minervini, who is a very good trader as well in the markets, pretty legendary trader. And he showed something pretty interesting that compared the market today, which is now kind of like consolidating in a tight range after that initial rally, right? And it's pretty similar to what happened in 1991. So in 1991, you can see the market kind of like started rallying off the lows, consolidated, and then there was what we call a final shakeout. Okay, so sometimes when there's a catalyst, market makers and these high frequency traders would kind of like shake out, do a large shakeout of the market to take out the stop losses of the retail traders, to shake out the weak hands before it goes to all-time highs. So again, I'm watching whether that will happen. Okay, so again, there are two scenarios. If there's no catalyst, the debt ceiling gets raised easily, then we just simply break out of this range and we just go to all-time highs. I mean, maybe not this year, but maybe next year or the year after that. But if there is a catalyst where, again, some shit happens that we can't predict, we may have a final sell-off that shakes out these stop losses. Now, when that happens, I'm going to buy like crazy. I'm going to be a big buyer. I'm going to sell a lot of puts. And I'm going to take advantage of this high option premium during panics. After the shakeout, once the last of the weak hands are flushed out, then we will rally in a sustainable way. And this bull market, again, most bull markets will last for at least 3 to 5 years or even the next 6 years. So I do expect a lot more upside from where we are right now. All right. So it's just beginning. The bull market is just beginning. Whether we just continue from here or we got another final shakeout remains to be seen. So keep watching, keep following the principles, and I'll see you guys on the other side. May the markets be with you. And till then, take care. If you want to catch my latest videos, click on the subscribe button right now. Click on the bell so you get instant notifications once I upload my latest video. If you want to check out my online courses, go to piranhaprofits.com, where you're going to learn how to invest and how to trade the financial markets and create an income from all around the world. If you want to join my live Wealth Academy program, go on to wealthacademyglobal.com and find out more about how you can learn investing and trading live online. This is Adam Khoo, and may the markets be with you.